Mr. Prashant Goenka, the Group CFO of NephroPlus. Mr. Goenka, welcome on board. Thank you so much for joining us here on ET Now. It's a pleasure to have you on board.
Thank you for having me.
Right. So, sir, another strong quarter with profit again growing faster than revenue. Can you tell us what is the main driver of this operating leverage in the first quarter?
Sure. I think as you mentioned, we have seen a fairly steady quarter. Our revenue grew by 24%, our adjusted EBITDA grew by 31% year on year, and PAT grew by 42%. Our EBITDA margin also saw an increase of 120 basis points on a year-on-year basis. This result was made possible due to the strategic levers that we have indicated in our previous meetings. As a company, we are focused on deploying these three levers. The first is organic growth within our current footprint. We currently have 550 clinics across 4 countries, across 330 cities. This organic footprint has contributed about 60% of the growth, revenue growth we saw this quarter. The second part of our lever is to add new footprint in our existing geographies. In India, we added about 17 new clinics. In Philippines, we did 7 acquisitions. So that was the second big lever in terms of driving this, driving the performance this quarter. And the third part of the lever is adding a completely new geography. We are currently trying to create footprint in Saudi Arabia. We have also formed an entity in Kazakhstan. The numbers for these countries will come in the future quarter, but we continue to remain focused on adding a new geography in the near term. So those three contributed to the current result performance.
Okay, adding a new geography, that's something that we're going to be watching out for very closely. Thank you so much for your time today, Mr. Goenka, and good to be speaking with you. You know, I just want to take a look at how your international business has shaped up this time. Your international revenue has now crossed 55% of your total business, overtaking India nominally. Can you talk to us if this is how the mix is going to look like going ahead as well, and what are your plans for your international segment?
Yeah, as you saw, our international revenue is now 45% of our business, and this mix has continuously increased. One of the bigger reasons for the operating leverage to come is because of the growing international mix. As we have indicated before, we are an India platform where we operate at $22 price point. Because of this platform, we have created an operating model that works very efficiently. When we take this model to international geographies like Philippines, which is at $110 price point, or Uzbekistan, which is at $60 price point, we are able to extract greater margin compared to India. So in the near term, we will continue to see this international revenue mix inching upwards on a slow, gradual basis. At the same time, we will continue to grow our India platform as well, because it is the India platform that is driving the overall consolidated growth. So we will see the growth on both sides, India and international. But because of the revenue per treatment being higher in the international market, the share of international revenue will continue to inch up.
Right, Mr. Goenka, you mentioned that revenue per treatment is higher in the international market, and similarly, your revenue per treatment has grown by 9% in this quarter alone. Can you tell us how much of this is coming from the international mix and the currency versus the India treatment?
Most of this revenue per treatment growth is coming because of the international mix. The forex for the countries have remained relatively stable, so we did not see any material improvement in revenue due to the forex part. That was largely muted. So most of the revenue RPT has come due to the improved international mix.
Okay, and Mr. Goenka, just trying to understand on the margin front, last quarter you had flagged a one-time credit provision that hit margins, and you had said that excluding that, margins would have been closer to 25%. This quarter you're back to your strong, almost 23% margin. Was that ECL issue fully a one-off, or is there any residual impact that we can still expect to see on the margins going ahead?
So as a company, as a dialysis company, most of our payer is government. So AR is a structural issue. That's why any investment we make, we account for the working capital requirement, the AR requirement that comes with the business. And only when it makes sense from a capital allocation perspective, we allocate. So we are very comfortable with the working capital and the AR cycle or the ECL cycle that comes with it. Having said that, we typically expect our ECL provision to be somewhere in 2 to 2.5% of our revenue. This quarter, we have seen about 2.4% of ECL coming into the other expenses, which is in line with our expectation of it being between 2.5%.
Got it. Mr. Goenka, also to speak about your Philippines business then, this quarter we saw a new clinic addition of 7 clinics in a single quarter, and that's just pushed your Philippine clinics count to upwards of 50. Can you tell us if this pace of roll-up is sustainable, and also what sort of clinic addition are you looking at on the group level for the rest of the year?
At a group level, we expect to do around 12 to 15 clinics in a year in Philippines. In India, we typically try to do 40 to 50 clinics in a year. Philippines, we had a good quarter where we did 7 acquisitions. But business development and acquisition by nature tends to be lumpy. We could have a good quarter, we could have a slightly light quarter. So the quarterly, this acquisition piece cannot be seen on a quarter-to-quarter basis. We have had a great quarter this time. We may have a lighter quarter in the future, but on an annual basis, we expect to do about 12 to 15 clinics acquisition in Philippines, and we are on track with respect to that.
Okay, looking good, and you've done almost 7, in fact 7 in the first quarter itself, so looking good over there. Mr. Goenka, thank you so much for your time. Congratulations on the quarter, and hope to catch you in conversation when it comes to other quarterly numbers as well going down the road. Thank you so much for your time today.
Thank you. Thank you for your time.